Hi guys, in today's video I'm going to discuss three stocks that I believe the share price is going to double, alright, very quickly, and they're also very good for buy and hold for the long term. So as part of the video I'm going to discuss the fundamental analysis as to why I believe it's a good time to buy right now these stocks, and also why the share price for these stocks are going to double. And as well as that, I'm going to go into the technical analysis as to why it's a good buy zone, or why we're currently at a good buy zone right now, and basically give my future predictions for these stocks and the share prices for these stocks. So make sure you guys watch to the end, alright, so you see all the stocks I'm trying to put you guys on. I'm trying to put you guys on some good, really good plays right now. Hi guys, welcome back to Investor Prime TV. David here. If you're new, this channel is a one-stop shop for anything investment. So investment ideas, investment discussions, stock picks, when to get in the market, when to get out. So make sure you guys go ahead and subscribe, and of course hit that notification bell so you don't miss any further uploads. So in this video I'm going to put you guys on three stocks that are very good right now. The share price are going to double. They are currently at buy zones, and I'm going to give exactly the prices to get in for maximum profit. So the first stock whose share price is bound to double, and it's a great stock to hold on for the long term, is NIO. So ticker symbol NIO. So let's dive deeper into NIO and why it's a good stock and company to get behind right now. So currently on Yahoo Finance. So for those who don't know who NIO are or what they do, so NIO Limited, they closed at $56.27. They're based in Shanghai in China. NIO Limited designs, manufactures and sells electric vehicles in the People's Republic of China, Hong Kong, the United States, the United Kingdom and Germany. The company offers 5, 6 and 7-seater electric SUVs. It is also involved in the provision of energy and service packages to its users, marketing, design and technology development activities. So basically, in a nutshell, NIO's main products are electric vehicles, and as we all know, the electric vehicle sector is hot right now, and NIO, basically the share price to date has pretty much been mimicking the way Tesla's share price has been moving. You know, they've been making new highs. So if we look at the summary section of the Yahoo Finance on NIO, the market cap is 87.7 billion. So already this is a large cap company, which shows is very stable as a company. They do business very well. Their strategies are very good, and they've got a lot of ideas. They've got a vision for this company, and they're serious about realizing that vision, i.e. making this company very successful. So the beta is 2.8. So the beta is basically a measurement of volatility within a stock, and 2.8 is fairly high, which means a lot of people, investors, are getting behind this stock. A lot of investors are buying this stock up, rushing this stock, which is creating a lot of demand for the stock. So the trading session on Friday, the volume was 138.8 million shares traded. That's huge, but their average volume is actually 180.3 million shares traded on an average basis, which basically means a lot of people are getting involved in this stock. All right, so if we take a look at what analysts are saying about this stock and about the company, so right now they've gone from hold towards buy. Okay, so this is the perfect time to actually get in, because the minute this becomes a strong buy, you would have already been in at a good price, and basically you'd have rolled that baby up. So I believe the share price is definitely going to get to 100 very quickly, and even more. So currently on Investor Place, NIO stock will continue this momentum well into 2021. NIO stock is attractive even as Tesla kicks the competition up a notch. Chinese electric vehicles EV maker NIO was one of the biggest winners in the stock market last year. NIO stock gained more than 1600% in the past year relative to the S&P 500. So NIO on its own made greater gains than the S&P 500, which is an ETF of the 500 top best companies in America. So already they're doing very well. The stock price is doing very well. They've been making great gains. So as an investor, it makes perfect sense to be behind NIO and to invest in NIO. After an almost 50% increase in its price this month, NIO is showing no signs of slowing down. With another strong quarter and several innovative developments in the pipeline, expect NIO to continue its impressive run this year as well. As we've all heard the saying, the trend is your friend. So right now, NIO's having a very strong trend. It doesn't look like it's slowing down or reversing anytime soon. It might have a slight correction here and there, but those slight corrections are just perfect opportunities to get in the market when the price is lower. But ultimately, I believe there's no stopping NIO's share price right now. So currently on Yahoo Finance, NIO Inc. announces closing of $1.5 billion convertible senior notes. Okay, so first of all, convertible senior notes are, think of it like company debt. Okay, so when the company is doing business, etc., they take out loans in order to fund the company or fund the ideas or fund the products they're building and marketing, etc. So whatever the company needs the funds for, they take out loans. So these loans are effectively seen as debt to the company, and over time they pay off the debts, etc. And if they're publicly traded, then they can pay off the debts through equity built within the share price. So this headline is effectively saying that NIO has effectively closed off the debts. All right, they've paid off the debts. They're using the equity built within the share price to clear off the debts. So what does this mean for NIO? Basically huge things for NIO, meaning that they can have more resources and more funds to put towards their ideas. They're no longer paying off debt. All the money is pretty much theirs and they can utilize it in the best way for the company, which ultimately means that this company is going to continue growing. Basically, they're going to see a lot of successes in the next coming years, and ultimately their share price is going to reflect this. So if we currently look at the chart of NIO, all right, so as you can see, basically from last year, how NIO share price has just been rising and rising, making new highs, dipping to the previous high, making new highs, etc. All the way up from pretty much $4. At one point, this was a penny stock. And currently, the last trading price was $56.27. But I believe this is a perfect time to buy or to get in on this stock, because it's made a new high and it's currently had a correction basically from $65 all the way down to $56. And currently the correction has pretty much got to the previous resistance, which is now effectively a support line. So I really see this share price getting to $100 very quickly. So my future prediction for NIO right now is, I believe in this next 6 months to a year, at least this year, the share price is going to get to $100 or even beyond. Who knows, it might even get to $200. But right now, I believe the share price is definitely going to double in the next couple of months. So it's great to buy and hold. Guys, so stock number 2 is FCEL. So FCEL is the ticker symbol. So let's dive into FCEL as to why this is a good buy zone and a good stock to get behind and buy and hold for the long term. Guys, so we're currently on Yahoo Finance. FCEL closed at $15.84 in the last trading session. So for those who don't know, FCEL Energy Inc., or ticker symbol FCEL, are based in the United States. FCEL Energy Inc., together with its subsidiaries, designs, manufactures, sells, installs, operates, and services stationary fuel cell power plants for distribution power generations. To summarize, FCEL Energy have got their hands in pretty much anything to do with fuel cell technology. So designing, manufacturing, selling, and even installing fuel cells basically for power generation. So currently on the summary, so the market cap of FCEL is $5.1 billion. So they're effectively a mid-cap company, which shows that they're basically stable as a company. They've got an ish together as a company. So basically the strategies as a business, the resources, everything, they've got them all there. They've got a vision for this company and they're ready to take this company to new heights. So the beta is 5.33, which is a high beta. This shows that there's a lot of volatility within the stock price, and ultimately shows a lot of investors are getting behind this stock. They're basically buying this stock up. So the trading session on Friday saw 59.75 million shares traded, which is very high. It's actually lower than the average volume traded of 65.4 million, which shows that a lot of people are getting behind this stock price. So if we look at what analysts are saying for FCEL, currently they're saying you should hold. Okay, I believe it's a good time to get in on this stock right now. They're eventually going to go from hold to buy strong. So by the time the stock is at a buy strong, you would have already been in it from time. So by the time a lot of people are talking about this stock, you'll be thinking, oh, Investor Prime already put me on this stock a couple of months ago. You know, I'm jamming, you know. So so currently on Investor Place, there's still plenty of time to invest in FCEL. It's a compelling play on hydrogen right now. Hydrogen stocks have been incredibly explosive, which ran from $7 to $20 before pulling back recently. However, most can see even more upside in FCEL stock. Hydrogen has a bright future with Joe Biden President-elect Joe Biden is bullish for hydrogen. Not only is he expected to sign an executive order for the US to rejoin the Paris Climate Agreement, but he's also expected to invest heavily in clean energy and related infrastructure, including hydrogen. Guys, need I say more? All right, so Joe Biden, basically, he's very bullish for hydrogen and clean energy. The way the world is going right now, we're all moving towards clean energy, okay, and renewable energy. Part of the reason why we're moving towards clean energy is it's a lot more sustainable than traditional energy sources like coal, gas, etc. So the minute Joe Biden comes into office, he's pretty much going to put his foot down and throttle on clean energy, which is going to ultimately see good things for Fuel Cell as a company and as a stock. So right now is the best time to invest in this stock while it's at $15, because you don't want, when the stock is at $50, you'll be thinking, oh, I wish I got it at $15, or I wish I got it at $20, or I wish I got it at $10. Get in this stock right now, because there's a lot of investors waiting to jump on this stock. Especially now is the best time to get in, because not a lot of people have maybe heard about this stock or know about this stock. So getting in basically before it becomes a trend. So I'm trying to put you guys on this stock before it becomes a trend. So if we look at the chart of Fuel Cell, as you can already see, Fuel Cell pretty much in the last 3 months since November was $2. So in the last 3 months, it rose from $2 to where it's currently at, or the last close at $15. Okay, so that's a huge move already. So I'm trying to put you guys on. I believe the share price is going to double very soon, very quickly. So I'm trying to put you guys on at a good time to buy. My future prediction for this is, of course, I believe it's going to get to 30. It's going to double. So I've got my price target at 30 at the moment. But when it gets to that price, what I'm going to do is I'm going to wait until it dips, and then I'll buy more. The third stock that I believe is going to double is Dropbox. So ticker symbol DBX. So let's dive into Dropbox, why I believe it's a good time to buy right now, and also my future prediction on this stock and future plans for this stock. Guys, so currently on Yahoo Finance, Dropbox. So Dropbox closed at $22. Okay, so for those who don't know, Dropbox, they're located in San Francisco, United States. So Dropbox Inc. provides a collaboration platform worldwide. The company's platform allows individuals, teams, and organizations to collaborate and sign up for free through its website or app. As of the end of 2019, it had approximately 600 million registered users across 180 countries. So already this is an established company. It's got a lot of users. It's got 600 million users pretty much globally. So it's pretty much established at the moment. They're doing the thing, they're doing very well at the moment. Okay, so to summarize what Dropbox is effectively, it's like a cloud. So you can pretty much put files, etc. So you can effectively share files, etc. to people instantly. So if we look at the summary of the company on Dropbox, so the market cap is 9.13 billion. So they're a mid-cap company. So the beta is 0.89. So the beta is quite small at the moment. So right now the stock is not very volatile at the moment. So there's nothing really swinging this stock up or down, huge swings, etc. Still a good time to buy and hold at the moment. So the volume is 5.8 million and the average volume is 6.9 million. So the volumes are fairly a lot smaller than the other two plays that I'm putting you in. But there's a reason I'm putting you in Dropbox at the moment, because things are going to pick up for Dropbox. So if we currently look at what analysts are saying for Dropbox, right now they're saying is leaning towards a buy. And I agree with them. I believe it's a good time to buy because the share price has been falling, basically putting the stock on sale. So it's a good time to buy and accumulate your position, build your position out. Okay, so if we look at the article on CNBC, Dropbox to cut 11% of its global workforce. So looking at this headline, from a logical point of view, I would think that Dropbox are doing badly. The fact that they're cutting 11% of its global workforce, I would be inclined to think, oh, the company is not doing very well. They're not making enough money to support the 11% of the workforce, or to continue supporting that 11% of the workforce, etc. So as a company, it's not good. It's not a good idea to invest in. But as an investor, I think this is a great opportunity to get behind Dropbox. The reason I believe this is a great opportunity to get behind Dropbox is that is cutting 11% of its global workforce. So they're pretty much going through a business restructuring. So they're looking at how much money, the revenue they're getting, and basically, okay, what they can do. Maybe they've been hit by the pandemic, etc., but they're looking to cut 11% of its workforce. So which means that the funds that they would have used to support or to maintain that 11% of the workforce effectively goes back to the company. So overall, they have more money to actually do things for the business and to invest within the business. So imagine you're getting involved in stocks and shares. So you have a portfolio, you're looking to buy shares, etc. So you have a portfolio of different shares, you've diversified. So you look at certain shares that maybe are not doing well, or certain companies that are not doing well at the moment, okay? And you see opportunities elsewhere. So of course you're going to ease off on those shares for the company that are not doing very well, so you can allocate or reallocate those funds elsewhere and making more money. So that's effectively what Dropbox as a company are doing. They're taking the funds that they were using for that 11% of the global workforce, they're taking them back and reallocating them in other ventures and other ideas. So guys, if we look at the chart of Dropbox DBX, so as you can see, the share price has pretty much just been on a decline. For the most part, it's been on a decline from $25 down to $22 right now. So this is part and parcel with them actually getting rid of 11% of their workforce. So a lot of people, investors, might be thinking that's a bad thing for the company. Let me bail now, let me ease off my shares, or let me close out my positions that I have on Dropbox. But I see this as a great opportunity. The reason for this, on a technical note, is if we have a look, the way this share price just rose, okay? So it made a new high here, it broke this resistance, and this resistance effectively, okay, at $20. So now it rose again and it has broke this resistance at $21. So the price, the share price, is actually heading back towards this $21. So it looks like it's formed a support around $22. So guys, that's my fundamental and technical analysis as to why I believe those three stocks, basically NIO, Fuel Cell, and Dropbox, are very good to get in right now. Those share prices, they're gonna double very soon. I just want to put you guys, my subscribers, and anybody who's watching, on these stocks because they're very good plays. If you guys enjoyed this video, make sure you like, comment, and subscribe, and of course hit that notification bell so you don't miss any further uploads and consistent content like this. Thanks guys, I'll see you in the next video.